Sir, can you hear me? Deep sir?
Yes,
Okay. Yeah, namaste.
sir. We'll wait and participants.
Fine, fine. Srinivas
We'll,
sir, well,
Very good evening. And this work from
correct.
busy with
Yeah,
this.
yeah.
No time.
Yeah.
Yes, yes. Sir, take your time. No problem.
And just and you would just want to just check up that thing, so you can do that
No,
thing if you want to.
no. Basically, sir, I am always extempore only. So I don't share normally any PPT. It's an extempore thing. Whatever data I want to speak, I will write in the chat box. So don't.
Great.
Sir, very good evening.
Very good
Sir, sir, thank you for this opportunity.
It's our pleasure.
Thank you, sir. Thank you so much. Here only. So do let me know when to start. I am here only.
Sure, sir, sure.
Okay.
Participants will just wait for another one. We'll begin and
uh,
Can we start?
yeah, Jaideep,
yes, sir.
continue.
Okay. Good afternoon here. Sai, Mahavir University and Hill of Management. Extend my warm delegates one day webinar Indian. Dear participants, has been hit going driven global crisis. 39 As the Hindu News 18 October, a health crisis generated a crisis. The two Indian economy at this is to save the country coronavirus, a health emergency. Saving lives of the to save the economy from a crisis. Dual effect of corona and lockdown. Though in still the spread of the virus, COVID-19 this activity and life in the country. Trade has business the people have in the major drastic and monetary stimulus is similar to the traditional Keynesian prescription of pump priming. Income transfer to having higher margin to spend can boost up the sagging demand. As we all have been affected by COVID-19 pandemic by and large, so being a victim, we all should aware about the ongoing economic crisis and its repercussions on our lives. And to serve this purpose, we have invited eminent speaker Dr. V. Aditya Srinivas. I consider it a great honor to welcome Dr. V. Aditya Srinivas. Dr. Srinivas has been serving as a head international Bombay Stock Exchange Broker Forum since 2000. Dr. Srinivas from USA in management. PhD in South Management Health Management, American Academy of Financial and Adult Management in the year 2000. Finance with distinctions from South Gujarat. Dr. Srinivas has published 32 research papers in various books and journals. He presented 25 research papers in national and international conferences. He has authored a book on Introduction to Indian Commodities Market. He also authored chapter in the book called Security Analysis and Portfolio Management, along with Salini Talwar from KJ Somaya Institute of Management. To share his insight on COVID-19 with all of us. Please.
Thank you very much, sir, for giving me this opportunity. Grateful to the Bhagwan Mahavir University, especially Dr. Snehal Mistry, who has been associated with me for more than 20 years. I was his student way back in 2002 to 4. Friends, please switch off your audio and video mic. Basically, economy in the current scenario. He said that facing a pandemic called with this. Now this as a what problem, but it has now got converted into an economic crisis. Entire 205 countries. See, what is the main problem as far as that probably into not only India but see, if we talk of basically IMF, International projected the world GDP 4.4%. That we are growth rate. India, yes, because India's GDP is right now it is minus 23 9%, 3.9%. The consensus among our GDP may territory, but the range may be 15 to 17%. But this minus 23.9%, to be very frank, has surprised indicator. Okay, obviously, no positive unlock has ensured that some activity start. Broad picture is in a difficult scenario. Now here, let us understand. GDP is right now minus 23.9%. Apart from this, if we see the unemployment data, which is the what I can say the key issue, unemployment data is at 27%, friends. Our unemployment has risen. On 1st March 2020, it was at 6.1%. So basically, if we talk of this thing, then even before the pandemic started, our unemployment was at all-time high, friends. It was at a 41% was our unemployment, but unfortunately during this lockdown it has skyrocketed to 27%. And we be surprised to know, friends, from 1st April 2020 to August 2020, if you see, totally 7 lakh jobs have been lost. 1.7 lakh jobs have been lost, friends. So that is a huge what I can say blow to the economy. For these people who have lost their jobs, obviously most of them will be having a housing loan, they will be having a car loan, capital goods loan. So all these people will obviously get stuck. Clear? So basically, NPA system may rise in the future. So that is where the financial markets are also under stress. And that is what the whole problem about the economy is, friends. That the way basically what I can say, unemployment has gone up. That is a huge threat to the economy. It's a huge threat because in India, what we are harping upon, three things. See, there are basically three key features of economy. Which are the three? It is demographic, it is domestic consumption, and third is basically savings rate. Correct. So basically, if we talk, friends, we have around 70% of population who is below 35 years of age. The average age is 26 years. In USA, which is 42, Europe it is 47 years, and Japan 52 years. So basically all these four major economies in the world, US, Europe, China and Japan, friends, typically they are facing a problem known as aging population. They have large number of people in the higher age bracket. So that is causing trouble in their economies because demand and consumption does not pick up quickly. On the other hand, if you basically see, ours is a very young country. So basically the benefit is when the population is young, it will work. When it will work, it will earn. When it earns, it will spend. So when it spends, obviously the GDP is bound to rise. And that is the key reason, friends, precisely that today all multinational corporations want to be a part of India's growth story. And that is why they are investing in our economy in a big way. That is something we have to keep it in mind. The second important aspect is domestic consumption, friends. Now, this is also very, very key thing. See, whatever we manufacture in India, 80% is consumed by our own people. So we are not an export-dependent economy, friends. We want to increase exports, no doubt in that, but we are not dependent on exports. Whereas in case of China and Japan, they are typically dependent on exports. Europe lives on credit card, and Europe lives on tourism, and US lives on credit card. So that is something we have to keep it in mind. So as far as our economy is concerned, friends, 80% of consumed only 20% is resilient. Our economy external shock. Economy is in a far better position to live the life, and we are in a better position to sustain our GDP growth rate. Friends, looking upon India, he has to invest in Indian economy. It's a fact. Reason that basically India, you will find the way GDP will bounce back. One should put money that you so that you excel in. Third, friends, high savings rate. Correct. What is our 7% of GDP compared to of world average? Correct. That is a major thing. 1%. Now, why results investment in asset friends? Basically, what happens is if they are losing jobs, slow down far to the what I can economies because of our savings habit. So that ensures that we have sufficient with any confidence in the Europe. Obviously, savings rates are negative. So this is something, friends, the three key features for our economy, and that is why we need to keep it in mind that India will outperform other economies by a sustainable margin. That is something very important. Now, if we basically talk upon friends, what has been our current this thing, then if we talk of our GDP data, see our GDP data came minus 23.9%. Period 2020. May were totally locked down in total. People were forced to stay home. New consumption happened. This data had to become. This is not the surprise is to the extent that we this 23 is difficult thing. But from here onwards, if you see now come out of 10 and all these 3 months there have been what friends there have been unlocked. So activities have started, and this will ensure friends that this time which will definitely be far better than this minus 23.9%. In fact, share with you friends that even in this time of lockdown, was the only sector, agriculture was the only sector, friends, which registered a positive growth of 3.4%. That is the what I can say silver lining. So that was pre-monsoon. This time monsoon has been 110% of the normal. So monsoon has been very good. So there definitely will be a bumper crop production. So agriculture will give boost to the economy, and definitely there will be rural income spending will go up. So when rural income goes up, obviously the demand and consumption in the overall economy will rise, and this will ensure that our economy grows in a big way. This is something, friends, very, very vital and important. Here, friends, one thing I would like to tell that as far as our agriculture sector is concerned, this is something we have to keep it in mind. Now, sharing some positive data. We talk of spread. Then, if we take April, the GST collection was only 30,000 crores. Obviously, there was strict lockdown. In May, this figure went to 60,000 crores. Correct? Because after May 18th, to be very frank, lockdown had diluted. In the month of June, when we had first unlocked, the GST collection went to 90,000 crore, which was near to pre-COVID levels. In July, we were able to sustain it to 87,000 crore. In August, it was 86,400 crore. So again, some stagnancy was seen. But then, friends, September turned out to be very. September, the data is 95,400 crores, which is even 4% higher than September 2019 figures. Now, that is the major indicator, friends, that as far as the unlock is concerned now, it has really helped economy to come back on the what I can say, the trajectory of growth and consumption. Though it will take time, definitely it will take a lot of time, but definitely there are green shoots visible in the economy. And if we try to analyze which has come, the September economic data, friends, it is definitely on a much, I can say, positive territory, the September economic data. Why we can say it is on the positive territory? Because of this reason. See, if we take off September 1 data from September 2020 economic data, then I am writing few points which are very important. Number one, GST was 400 crores, but it was at even for e-way 5.74 crore. Then if we basically see e-way bills, so that is again a higher level. GST was 95,000 bills. Petrol up by 16%. Then fourth, if you see basically exports went up by. If we talk of tax collection, COVID level. My PMI friends purchase manager index is 65. As far as I'm concerned, is that 400 crores, then e-way bill 60, exports were up 5.2%. So friends, that overall if you trying to come, no doubt in that, doing some green shoots. In fact, the auto sector, you'll be surprised, friends. Rise in sales in passenger car, commercial vehicles, was on a percent rise in sales. That's a big money economy. And going ahead with the agriculture sector will have a bumper now in the hands of farmers. Spending, obviously, economy will keep it in mind. International, before that, friends, see, a lot of people have felt. See, COVID has impact on different sectors, which were the by to right now. See, these worst affected. Some industry 50 lost job, 50 people travel industry. Hospitality of traveling. So basically 8 lakh cost in the hospitality industry. Obviously, so right now it is the past data to share. People have traveled from different cities to within India. Now aviation sector is slowly and gradually, but even this sector was worsening. The pilot and the nurse cost and basic. This is in totally cost which are affected. Indigo, which is the India staff, more than 2 jobs. Jet Airways, you are already aware, 22,000 people had to lose their jobs. That was, of course, before the pandemic, but this sector is anyways in down. Real estate. See, real estate where again there was huge issues. Real estate had a very good turn between 2003 to 2013, but after that, now the whole sector has gone for a toss for the simple reason: number one, too much of oversupply. That is, every second company entered into real estate. We are the masters. And second is unrealistic pricing. They created houses at very abnormal prices. So that has actually created problem in the real estate sector. And in fact, this work from home, friends, trust me, a lot of companies are considering work from home as a permanent solution for the simple reason, friends, that this is a very, very cost effective model, very cost effective. Your operating cost drastically goes down. So basically, if that happens, then you will find even the commercial real estate will find a lot of difficulties. And when real estate goes into down, workers, the rural workers who come to the cities to work at the construction site, they have been made jobless and they were forced to go back home. That is why we had this problem of also, friends. So these are the four sectors, friends, which had a huge negative impact. Gradually things are improving. For example, if you see last month when Maharashtra government have reduced the stamp duty from 5% to 2% as far as basically Maharashtra's real estate is concerned, there has been some uptick and movement in the real estate segment, but that is happening in basically, if I tell you, friends, it is happening what I can say affordable housing. So it is happening in that particular space only. So tours and travels, hospitality, aviation, real estate, these have been the worst affected sectors. That is something you need to keep it in mind, the worst affected sectors. As far as basically the positive sectors are concerned, now we'll talk of something positivity also, a lot of negative, the positive sectors which are IT and services. See, these five sectors, friends, positive COVID, you will find these sectors. I'm next more 10-15 years, they will be used. COVID has seen towards life. The entire now understand hygiene, physical fitness has been widely speculated that those in a better position to deal with this those who are so anyways, see first needless to say, friends, the demand of sanitizer has gone up like anything. The medicine at what I can say skyrocketing prices. So obviously pharma industries have made a huge profits in particular era and going ahead also because people's orientation towards physical fitness and personal hygiene totally, and it will basically still be in a this particular sense. So going ahead also, friends, there will be large number be interested in this kind of sector. So obviously, if you are willing to buy any shares, pharmaceutical sector shares in your portfolio, very critical and important, very important and vital thing. So that is something you need to keep it in mind. Second, if we talk of automobile sector, see if you see auto sales have drastically gone up. The reason for this is that virus spreads through infection. So there is obviously a fear in the minds of people that if large number of people through public transport, there are chances that infection. So here the whole concept is basically why to travel in any public personal vehicle, and that is the reason, friends, why automobile sector is basically thriving like anything. Automobile sector is something, friends, which is become the need of the hour, and that is why people are busy buying their own personal vehicles. Clear. So that is the reason that auto in huge demand, and going ahead also you will find two-wheeler, four-wheeler demand will be find new jobs, their jobs gets restored. There will be huge positivity for this sector also, and you can very well see that even there was a huge rush for people buying their own cars or two-wheelers, whatever they are comfortable. So because from the infection point of view, when you travel in the public transport, that is also something we need to keep it in mind. The third sector is IT. See, friends, whatever work has been done globally during this pandemic is only and only because of information technology. It is only and only because of that. So basically, IT sector itself, and it has been clearly indicated that IT sector is a part and parcel of human life, and it's a fact. So basically, rupees. Today is at 1100 rupees. Still 300 rupees. So basically, need to limelight because IT sector really, friends, trust me, IT will be the rule. The fourth sector very insurance. Insurance was instrument for tax saving. It was considered as an instrument. But this COVID-19, unless you are adequately insured, something happens to you, your family will be in financial soup. So because of that reason, friends, in the insurance segment, I would like to highlight here two things. Even all of you should have two kinds of insurance. That is a compulsory thing, friends, for your free. One is a basically, friends, term plan, and second is cashless Medicare. These two things are, friends, very, very vital. See, term plan means what? Term plan is a product, friends, where if I survive the whole term, I won't get anything. But God forbid, something happens to me during the policy period, the nominee gets very huge amount. If I give you my own example, I have a 1 crore rupees cover for around 40 the age of 80. Even if I die at the age of 84 or 83, 82, my nominee will get a huge amount here, and it also includes even suicide, accident, any kind of death is covered in that. So term plan is very, very vital for people. And is that God forbid some member of family does not have to face the financial music. So you need to take. And second is obviously facility put at stake, and you don't have liquidity issues. So cashless Mediclaim is also very important. Now, if you see insurance, see, friends, this industry for the first time approaching insurance agents and telling covered. Earlier, the agents were after the people explaining, but now people have realized that insurance is a part of portfolio. It is not just a tax saving insurance. Something very, very vital which you need to keep it in mind. Finally speaking, friends, financial services. See, financial services are equally important, friends, very, very vital. This is for the simple reason, friends, that today, if you see mutual fund stock are thriving. In fact, you will be surprised to know, friends, you will be really surprised that if you basically go through this thing, what I can say, the DMAT data, in the last 4 months, 40 accounts have been opened, 40 lakhs. And even in this pandemic, especially in July, August, and September, friends, just give me 1 second. And September, how much SIP money came into the markets? 7,500 crore rupees, friends, each month. Each month, 7,500 crore rupees through the SIP systematic investment plan, which you do in mutual fund, friends. Clear? So through SIP, money is coming in a big way, friends. So that is something we have to, friends, keep it in mind. So please understand, friends, that these are the sectors which will outperform in the future. So Indian economy post-COVID, these 5 sectors I am extremely bullish upon. So if you want to accumulate shares of these sectors, you can definitely do that. Plus, friends, always remember that our economy will bounce back like anything. There is no doubt in that. For a simple reason, we are a consumption-driven economy. So income starts coming back to normal levels. People start going out. Demand and consumption picks up to grow, friends. There is no doubt that. So this is something we have to keep level. Like unemployment. Even if you see the COVID-19, recovery rate 8%. Again, to be very frank, highest in the 88% rate has 5%. And at a global level, these are the best statistics that we have. So obviously, friends, if you see from this angle also, we are relatively in a better position to basically deal with this kind of situation. Yes, there are challenges, like if you see, even to the repo rate, basically, the repo rate, that is the top of flight now of monetary policy, the repo rate is at 4%, which is at 10 years low. We are having one of the lowest interest rates right now in India. FD giving, it is around 5%, and home loans at 6.9. This rates and bank. So basically, if we talk loans, they are at a drastically low level, but even then, the bank credit growth is the rate at which banks are giving loan is at only 5.7%, friends, which our long-term average is basically 15%. The bank's credit 15%. So that is a clear indicator, friends, that in spite interest rates being at a very drastic, still demand and consumption is not picking up in the economy, and that is why, because there is a consumer fear. Consumer fear is very high. That is something very visible, friends. People are fear to spend money. They don't want any EMI on their heads for the simple reason that in this situation, if you go with an EMI, you are bound to face a lot of challenges in the economy. Yeah, that is something we have to keep it in mind. So bank credit growth, we have to is something which is not easily it is easily available, but the businesses and the people are not willing to take it. So that is something, friends, again we need to take in. Definitely be a challenge towards the financial services area. But a very interesting fact, friends, how global people, how the global upon India. Now, you must have already heard that Reliance Industries has now become a zero debt company, correct? How it could become a zero debt company? It sold around 23% stake in Reliance Jio to 12 international investors for how much money, friends? For 1.25 lakh crore. They were, and who were these investors, friends? It was Microsoft, Google, Facebook, Silver Lake, KKR, Capital, then Abu Dhabi Trust. Means basically all who's who. Now the key question: see, why all these people, even during the global pandemic, so much money in India's for the most profitable company? Is it that they did not have any good opportunities elsewhere? No, friends, they had. But the point is, the grow in the coming years is something which everybody has to be very positive upon. And always remember, friends, that our economy, even if you see last 20 years, after all global crises, we have performed very well. In fact, if you see 2000 crisis, our friends, 6.3% world percent, correct? 2011 euros, our 7.1%. And if you see 2000 crisis, was percent 3% here. So this is in mind. So if we visit of our obviously as far as we have always outperformed the world crisis. So basically, if what I can difference, that we have also as our economy is concerned, friends, from the world economy by a sizable margin, and in fact in all global crises we performed well. So that is the basic reason, friends, that as far as our economy is concerned, we will definitely be able to generate good amount of return in the long term. And always remember, friends, as far as our economy is concerned, we are quite strong enough. We are a resilient economy. Consumption team, we are a very resilient economy, friends. So that is something which we need to keep it in mind. Lastly, to cover in another 5 minutes, then we will go for a Q&A round, so that we interactive session also. Always remember, friends, 4 countries are Europe, China, Japan. Why? Because they all account for of world GDP, correct? Of world GDP. USA contributes 23% in world GDP. Yes, Europe is 20. China is 3%, and basically, if we talk of Japan, it is 8.7. So basically, these four economies, friends, you can safely say these four economies are the pillars of the world economy, friends. So always remember, if there is a problem in either of them, now the world is bound to face a losing, and even all global stock markets will come down. So that remember very clearly. In fact, if you see 2008, 2015, friends, it's give negative, always even any negative return. So this is something, friends. In fact, friends, it will shine when you can by invest in the market status that option. To Reliance, you can invest. They are the best option. For example, they are the company. I'm in the chat box. Just give me 1 second. These 13 stocks you have to consider, friends. So even in this current pandemic also, if you want just invest in these 13 companies, they are the best companies as far as Indian capital market is concerned. In BSE, we have around 5,400 listed companies. Friends, these 30, the top 30 make the BSE Sensex, and out of the top 30, these 13 are the key stocks in which you can invest and make very good money. So this is something, friends, you can keep it in mind, and you can invest in these companies in a big way. So this is something, friends, you need to understand for yourself. So with this, friends, I would like to now open the floor for question answer session so that we can discuss things and I can clarify. Otherwise, it will be just a one-way talk, and which will. So please feel free to ask me questions or any question which you get in your mind, irrespective whether I have covered it or not. Please feel free to ask questions. You can unmute yourself or you can write in the chat box, whatever you feel comfortable. Yes, friends, feel free to ask questions.
Yeah, students and participants, we are open for the Q&A section, and I would advise people to have their questions in the chat box so that it becomes easy for everyone to see the question, and Srinivas sir can answer that. I hope it is fine, sir. Srinivas,
Yes, sir. Yes, please.
is this fine if we just ask the question, if the students
In the
ask the
chat box.
question? Or the...
Yes, definitely. Yes, see, Arshad, you can definitely go for SIP in SBI also. See, SIP stands for Systematic Investment Plan, correct? So every month you can buy 2 SBI shares. SBI one share is around 190 rupees, correct? So you can definitely buy shares in that format also. See, SIP can be done in mutual fund and you can do it yourself in stocks also. Only thing is that every month you should be disciplined enough to buy. That is what you need to do. And in SBI also you can do, no doubt in that the value of that share is around 204 rupees. You can definitely start, but the only thing is that why SBI does not get much of government bank, and in government, you know how things work. Correct. They work in a quite slow mode. So it is better that if you do in private sector banks, for the 13 stocks which I listed, they are far better an opportunity to do an SIP rather than going with SBI. This is again my personal opinion, but nevertheless, you can still do with SBI also. It is also fun. Only thing is that the stock moves very slowly. So because the stock moves slowly, you may not get enough return in a short span of time. The next question is, Amit, can you say something about banking sector like Yes Bank? See, friends, please understand that India's banking sector had a lot of issues in the form of NPA, correct? Performing asset we had. So our banking sector had totally rupees around 1 lakh figure. But out of this, you will be surprised to know 90% was from PSU banks only. PSU is an exception like 1,000. Out of that, to be a very frank, correct. To keep it incidents, if you primarily, it is primarily due to the this what I can say Yes Bank. Otherwise, if you see, apart from that, no other private sector bank has a government bank. If you take Jet, any other, then in that maximum loan has been given by SBI, and today they have to write off those loans. Correct, create a provisioning for them. So that basically creates a problem, friends. So always remember, sector is concerned now, things are in a far better position. Like sector now, banks have been given enough power and to be the defaulters and recover their money. So that is something we have to keep in code that has been passed IBC. So that has given huge power to the does not repay the loan. We have complete power to sell off the assets and recover the money. Yeah, that is something we have to keep it in mind. Gaurav, your question is basically, sir, I future. So how much scope in beverage industries? See, Gaurav, basically before jumping to any conclusion, please read a lot of things about economy. If you want to start beverage industry, please read how much capital is required, then what is the proportion of fixed capital, working capital, what are the government regulations, what is the pricing. See, right now, to be very frank, if I tell you, if you want to do anything, do it either in the education space or in the financial services space. Because in these two spaces, the capital required is relatively less fixed capital. It is all brain game. Whereas in beverage industry, if you basically install a bottling plant, you will require a lot of fixed capital in various assets, fixed assets also. So just take a very judicious call. Don't be in any hurry. And whatever you do, try to get only equity capital. Clear. Always try to get in equity capital. Very important. Do not go with any debt capital. You must be aware. Loans. One should not take any kind of loan, friends. Please understand. You should not take any kind of loan, because if you take a loan, ultimately you are bound to get trapped. See, there are classic examples. For example, the Anil Ambani flagship company. The stock was quoting at 540 rupees. To be aware, the company took 46,000. Had to shut down. They have taken 8,000 crore rupees of loan. They had to wind up. The largest NBF government, 1,000 crore rupees of loan they had accumulated. The highly leveraged schemes always mind. Just do with basically see positive lockdown when the shops were using soaps, medicines, then basically what I can say, soap, then biscuits, chocolates, tea, coffee. These things were always there. Shampoo, soap. These things were hair oil. These things were always in consumption, correct? So FMCG sector has definitely seen a huge growth rate. Even in fact today, if you see Hindustan Unilever results have come and the profit is up by 9%. 2,000 crore rupees the profit has gone up. So that's a clear indicator that FMCG has been in positive territory, and going ahead also it will remain in positive territory because the backbone of India is demand and consumption. And as I told you, that once people get back their jobs, and again the hiring starts, you will find a lot of people making good amount of money, and economy we have to keep it in mind. See, basically, Karan, to be very frank, privatization may not be answer. Even in private example, this bank is already an example. 3,000 crore only. Ultimately, to lose our job. Then, even in Axis Bank, Sharma was not extended. Why? That a lot of issues related to NPA. So, privatization only solution. So, the solution lies for Indian companies is to have a very vital, that is corporate governance. To have boards which are honest enough to take care of investors' interest. Correct. That is something. So, if corporate governance, you must have heard about that. So corporate governance means that how ethical and transparent is the board, correct? So if the board of directors are ethical, transparent, and if the independent directors exercise due caution, then whether it is a private company or a government company, it will perform well, and even interests will be protected, shareholders will be able to earn a good amount of return. So that is something, friends, we have to keep it in mind. So please understand that investing and how do you invest in which company. It is not about private or public, but it is primarily about that how ethical and transparent is the board of directors. That is something what is the key aspect in investments. Education sector, friends, Rajiv, obviously is something which will be booming like anything, because online education is the need of the hour, friends. Not only that, government is also in bringing in lot of foreign educational universities into the sector. So education and policy, if you see the way they have changed the things in the NEP and new educational policy, so there have been a lot of changes. The curriculum will be more practical based. It will be more of internships, practical learning. Even lateral entries will be allowed. A student can do 1 year graduation, then he can go for a job, then again come back and do. So a lot of flexibility will come. The education sector will also shine out like anything in a big way. That is something for sure, friends. You need to keep it in mind. And in India, we have 47,000 colleges, 900 universities. We have perhaps the world's largest education system, friends. Yes, we have the world's largest education system. The only thing is we need to make it more competitive, give more salaries so that more talent comes into the sector. That is what is the need of the hour. But trust me, this is some area, friends, where huge money is awaiting and huge talent will be available. See, please understand that government is not selling anything. Government is disinvesting. See, disinvesting in railways and other things government is trying to do. That government is holding around 100% in all these sectors. But with even 51%, government can control these sectors. So what government is right now doing is basically selling certain stake and raising money. See, government needs money for what we can say. Government needs money for running the country. Correct. So this strategy is called as disinvestment, whereby governments will sell 10 to 15% of their stake in these companies and will raise. For example, if you take LIC IPO is going to now LIC is valued at 8 to 10 lakh crore rupees. So even if government sells 10%, 80,000 crore rupees government will be raising 80,000 crore. So that is something we have to keep it in mind, friends. That 80,000 crore rupees government will get out of that this investment. So that is something very critical and important. So this doesn't mean, friends, that government's control goes away. Only thing is that when government will divest it and list this company on stock market, it will be more oriented, more accountable to the institutional investors like mutual fund and basically stock and FIIs. So that's a positive thing, friends. See, basically managing short-term and long-term investment, friends. See, to be very frank, don't go for short-term because in short-term nothing much can be achieved. See, 4 things are very vital for investment. Number one, FD. FD and provident fund should be done so that your capital is protected. And then you can invest in stock market, those 13 stocks what I told, and then SIP in mutual funds. If you do these 4 things, friends, with adequate insurance cover of yourself, then nothing will beat you, friends. These are 5 things I myself do, which I myself do these 5 things. So if you keep on doing these 5 things regularly on a monthly basis, you will definitely be able to create a good amount of wealth for yourself. See, FD and provident fund will ensure that you create safe capital for long term. And at the same time, friends, stock market and mutual fund will basically create the long-term capital appreciation for yourself. So that is again a very, very good thing which you can do, friends. And third basically is that you can always go with insurance and protect yourself. So these are the 3 things, friends, which are very vital. Friends, just give me 1 second. So basically, friends, the whole objective here is that once you have done all these 5 things, that is FDs, provident fund, then stock market, mutual fund. So stock market and mutual fund will create long-term wealth for you. FD and provident fund will create safe capital, and insurance will protect your near and dear ones. So if you do these 5 things on a regular basis, friends, trust me, you will be a financially free and a secure person. That is something you have to keep it in mind. Then the question is, what lessons can be learned from pandemic crisis as an investor? See, Varun, please understand that in this pandemic, in March 2020, if you see the markets had crashed from 40,000 to 25,600 levels. One thing very clear, never withdraw money when the market crashes. Please understand that is the biggest mistake typically retail investors do. Rather, that is the day on which we have to invest. See, had you invested on that particular day in Reliance Industries, in 2 months' time, you would have made a profit of 68,000. Important and critical. Remember, friends, that the market to invest in on which there are now there is every possibility that if Joe Biden wins, probably there may be a small crash in the market. If that happens, that could be an opportunity to buy good companies. So don't be afraid. In the long term, market always goes up, friends. Trust me on this. I have been witnessing markets for more than 20 years now. It always rises. Okay, then what is the next question? What lessons can be done? That you've done. What about gold investment? Yes. See, basically, gold, always remember, friends, gold is something which will always have an inverse relationship with as compared to stock market and macroeconomic data. That means whenever there is a negative news at the global level, gold prices will rise. And whenever there is a positive news at the global level, gold prices go down. At 50,000 rupees for 10 grams, obviously it does not make any sense to buy physical gold. It does not make any sense. What you should do is that you should buy gold ETF units. Gold ETF is it is listed on BSE. Gold ETF, SDFC gold ETF units you should buy. That is a very, very safe thing. What you can always try to do. In units, what will happen? There 1 unit is equal to 1 gram of gold. So for example, if we take 10 grams right now, 50,000 rupees. So 1 gram is 5,000 rupees, correct? But here you will get 1 unit here at 4,800 or 4,000. Sorry, you are available at 4,700. So why this 300-400 rupees difference? Because in Demat there is no making charge is added, there is no custodian charges or any other thing, storage cost. These things are not there. So always remember that as far as the pandemic is concerned, this is something you need to keep it in mind, friends. In the long term, you will definitely make money even if you have invested 10 to 15% in gold, and at least that much exposure you should have. Something very important. No, Karan, please don't compare Arshad Mehta and Ketan Parekh with Rakesh Jhunjhunwala. It's a totally separate, different thing. Arshad Mehta, Ketan Parekh had basically misused the system, misused the banking sector funds, and they had ripped the prices. Rakesh Jhunjhunwala is a long-term investor. He is buying stocks, and after doing fundamental analysis, and he does not even sell them for very long duration. So this is a totally separate thing. In Arshad Mehta, he had basically used the banking funds to rig the stock market. Correct. And the same thing was done by Ketan Parekh also. He manipulated 10 companies which are popularly known as K10 stocks. So they were basically different things. Don't mix them up. Will boycotting Chinese products result in increasing? See, Madhusmita, you have to understand one thing, that boycotting China will not help India unless we are more quality conscious. See, we need to be very much quality conscious. That is something very, very vital and important. Unless we are quality conscious now, we will never be able to beat China. See, if you remember when we were young, there were companies like Salora, Onida, all these companies were there. Correct, Salora, Onida, these were the companies. But what happened ultimately to all those companies? They had to shut down. Why they shut down? Because of the simple reason, friends, that these companies shut down because they were not quality conscious. They could not face the competition. So that is something we have to keep it in mind. You need to be quality conscious. That is something very, very critical and important. Yes, friends. Any other one or two questions can we take? Or shall we call it a day, sir? Whatever you say.
Sir, Aditya, sir, there is one question on YouTube.
Okay. Sure. What's that, sir, question?
State the reason behind increasing or fluctuating in the price of gold during this pandemic or during this lockdown?
Okay. See, always remember one thumb rule, friends, that gold will always rise when there is a global problem. See, gold is most liquid asset after cash. So whenever there is a global problem, there is an issue, the institutional investors, the foreign investors, they withdraw money from other asset classes like equity, mutual fund, property, and they will invest in gold. So that is why gold basically rises. That is something you need to, friends, keep it in mind. So always remember, as far as gold is concerned, gold will always have an inverse relationship with stock market and with macroeconomic data. Clear? That is something we have to understand. So whenever there is a problem at the global level, you will always find gold basically rising, and that is the fundamental rule, that gold will always rise if there is a problem at the global level. That is something we have to keep it in mind. It has an inverse relationship.
So sir, there is no other question. So shall we conclude this session here with your kind permission?
Yes, sir. Yes, sure.
Okay. Thank you, sir, for your valuable insight. Participants, there is one announcement. We are sharing the feedback link right now in chat box. So you all have to fill up that feedback form, and based on the response received, we are going to issue certificate on your through email within 2 days.
Sir, one humble request was there, that if you can just email me the name, mobile number, and email ID of all the participants. We would be requiring this for our attendance purpose. Name, email ID, mobile number.
Sure, sir. Definitely.
Sure. Okay. You can mail it. Sure. No worries. Okay, sir.
Neha ma'am, can you please insert the feedback link in chat box? Okay. Now I request Deepali Sa to express the vote of thanks.
Thank you, sir. Am I audible, sir?
Yes.
Yes, ma'am.
Okay. I would like to thank Dr. V. Aditya Srinivas for sharing his knowledge and valuable time with us on today's webinar on Indian economy post-COVID-19. Sir, very informative and very knowledgeable session said by you. We would like to thank you. Thank you so much, sir. I would also like to thank all the participants to join. And last but not the least, I would like to thank IQSSL of Bhagwan Nagar College of Management, Surat, for conducting such an informative webinar. We hope you all conduct this kind of webinar in future also. Thank you. Thank you so much, everyone. Thank you so much, sir.
Thank you, friends. Thanks a lot. Thank you so much. Thank you, Deepali.
Thank you,
Yes, sir.
Aditya sir, and thank you all the participants for your joining this session. We're looking for the same cooperation in future as well.
Okay. Thank you, sir. Thanks. Bye.
So with this, we are concluding this session over here.
Okay. Thank you.